Good day. Here we are, a day after the release of the monetary policy report of the Bank of Canada. The bank decided against releasing their usual set of forecasts for the Canadian and world economies. And it's hard to blame the bank right now, given the high level of uncertainty and how hard it is right now to put together forecasts. So what we're left with is perhaps to work with the most recent set of forecasts from the International Monetary Fund, the IMF. They did release this week their forecasts, and there are some interesting features in these forecasts. So if you look at the United States, for example, here's the forecast right now of a decline in GDP for the US of 5.9%. At the world level, this is for 2020, at the world level, the forecast is minus 3%. So if you think of the global recession of 2008 and 2009, if I work from memory, I believe that the decline in world output was minus 0.1% at the worst of the global recession. So definitely we are in a territory that is a lot worse than what we experienced in 2000 and 2009. And you see the rebound in the United States going from a decline of 5.9% to a rebound of 4.7%. So even that rebound in 2021, according to the IMF, will not be enough to far from enough to compensate the decline observed in or projected in 2020. Here are the numbers for Canada here, and you see again a little bit of a bigger decline, a steeper decline in 2020 and less of a rebound in 2021. And I think this is actually easily explainable in terms of Canada's dependence on the oil and energy sector and how hard it has been hit during this pandemic. A couple of other countries here that are interesting to monitor just because of the sheer importance of these countries in the overall ag markets. You look at China and India here. They are able to avoid a technical recession, and their GDP is not projected to come down. But you see that, going from around 6% forecast prior to the pandemic in China for 2020, going from 6 to 1.2 is a sizable decline and a sizable slowdown in China. So I would expect that to have some implications for ag commodity markets. Just a quick word on interest rates. Obviously, the bank decided yesterday against changing the target for the overnight rate. They've been on record as saying that they're not interested in having negative interest rates in Canada. And so we work with here the business average borrowing cost. And you see on the far right, this little bit of a down, up and down movement in average business borrowing costs. And this down and up movement has been just because of some of the bond yields that have been rebounding somewhat around mid-March for a week or around a week, and then you've seen bond yields decline. And so with the additional actions that have been announced by the Bank of Canada, I do expect that those average business borrowing costs are going to continue to climb down slightly by a few basis points. Whether or not we're going to get to that level of right around here where we had the lowest average borrowing cost on record around the late spring of 2017. It remains to be seen, but I do expect that average borrowing costs are going to be falling again. For more information, you can go to our website at fcc.ca/knowledge.